Welcome to the Personal CFO. Today we're going to be talking about economic and market forecasts. Now, why are we talking about this right now? Well, as I'm making this video, it's midway through 2023, and at the beginning of the year, all these really smart people, these really big banks and firms made some projections, and as we're midway through the year, this is when the adjustments start. So for the investment firms that were a little bit off, now's the time they adjust their estimates, so that way towards the end of the year they look a little closer. And I saw a couple of headlines come back to back, and I thought this is probably something that we should talk about because people read these and sometimes we can assume or think that these firms know something that we don't. And here's the short answer. They don't, but let's kick off with a couple of interesting articles. So the first article was from Credit Suisse, and they came out and adjust their estimate for the S&P 500. Initially, they had said, we think the estimate is going to be 4050, 4050, and we're going to adjust our estimate to 4700. Okay, that is a very large increase, almost a 20% increase in your estimate just halfway through the year. Now, why would they pick 4700? Well, currently the market's about 4500, and so if you give the S&P a little more upside through the end of the year, you end up right around 4,700. And so what kind of forecast is that? Well, they're just trying to pick something down the middle that is going to make them a little bit closer to accurate as we get towards the end of the year. So right now the S&P is at 4,500, 4,700, you're up a little bit. Okay, that seems better. But the key is it was substantially lower at the beginning of the year. And it can be a little bit misleading when you can just change your estimate closer. Now, my anticipation is those estimates get changed again, of course, so that we can end up closer than we started. But moving on. Okay, another example of this, Goldman Sachs came out and said, okay, we are lowering our estimates of a recession. Makes the news. Goldman Sachs is coming out lowering the chance of recession. Well, what are the numbers actually? Well, initially at the beginning of the year it said, hey, there's a 25% chance of recession, which is low. And they said, we're actually lowering it. After all of our research and analysis, our team has dropped it to 20%. So it went from 25 to 20. So it started low, and now it is also low. Sounds like news, but it's not really news. These are both almost non-numbers. Essentially, they're saying there's a low probability, in their opinion, of recession. Now, you can counter that. Vanguard thinks there's a 90% chance of recession. The point is, and understanding motivations is important here and can make this a little less stressful to read all these conflicting perspectives, is all these analysts are getting paid to make a forecast. We can't fault them for making forecasts, and we can't fault them for adjusting forecasts. This is their job, this is their career. But should we put weight into these forecasts? Probably not. Based on what we've seen about predictions and then updating predictions, they're not really accurate and they're not really helpful as long-term investors. So sometimes it's important to understand these for what they are, which is largely entertainment and guessing, rather than anything that's going to impact your future as long-term investors. I hope you found this helpful. And as always, thanks for investing your time with the Personal CFO.